Okay, morning ledges. So today we're going to be taking a look at the Bund. Um, if we go onto a day chart, the first thing you'll see is this hammer candle that we got yesterday on the close, making a slightly higher low than this low here. And all things considered, yesterday was a really tricky session, I think. I mean, if you pull up the 5-minute chart and look how the day occurred, intraday, yes, we did hold the lows, but it was incredibly choppy. I mean, look at this action that we get yesterday. I mean, no discernible trend on the day. All we can say is that those lows clearly held. On the 60-minute time frame, you can see that yesterday's highs were this area of prior lows on the chart, and therefore this makes the 15s area particularly important to the market. If we can hold the 15s, then I think we should be able to probe higher. Although you can see that the structure on the chart is quite messy here, so it's not the easiest to identify where the next level is to the upside, and as a result of that, I will be playing it very tight, literally one level to the next. The first port of call this morning, obviously, is this 15s to focus on. The issue that we've got here is that we have got an open gap that occurred this morning, and although you can see that the market is currently stabilizing at the 15s and trying to bounce here, I'm never a real fan of coming in and buying with an open gap here, so I'd like to wait. And I can see that just where the open gap would close, we've also got just beneath it yesterday's volume value area high, and I think that's a much more compelling opportunity to come in and do business on the long side. I don't think it's particularly easy to get long there though from a stop perspective, so what I would be doing is I'll be waiting to see if price tags 4s to 6s, and then look for something on the order flow around there, the price action, to indicate to try and get long with a tight stop. But that's the area that if we're going to bounce, that's about as low as we should go, in my opinion. So that's the first port of call, to try and look for the longs here. The next area on the 5-minute chart that's quite significant is 63.35s, and if I was to get long here, that's the exact area where I'd be looking to take profit. So look for it to hold this level, move to a new high, offset round here, and then if we do break that later, again to look for a pullback to get long and play it to the next area, which is 63.46s, which is the current week's VPOC, the volume point of control, the price at which we've traded the most volume. And again, around that area you'd expect chop. So if I'm going to come in and maybe buy the 35s, I'm going to be probably looking to offset at this swing high 44s, 9-tick move, and I'll literally just play one level to the next like that. Up at 63.60, we've got this area of structure, not too bad area to look for a potential short there, but these highs before it at 58s would put me off. So I've marked that out, but again, it's not really a properly compelling level because of the FTA. What you want to bear in mind is there was a shooting star a few days back on the daily chart, and the low of that shooting star is 71, and the low of shooting stars will often see a decent rejection, just like the highs of hammers will if we trade into them. So if that's coming in at 71s, you can see that right up here at 72s we've got the previous week's volume value area high, so you can see here on the profile this level up here. So again, this is typically a good area to look for order flow, to look for a short to bring us into the end of the week. But that's the play really so far. So to summarize, try and get long 4s to 6s, taking it as far as 35s. Try and get long again at 35s if it breaks, taking it up to about 44s. Try and possibly short up at 72s. Now if we lose the 4s to 6s, then it gets tricky, because I don't want to trade anywhere in this range. With the hammer giving me a bullish bias but the best level of the day not holding, I will not want to trade in this box. If we do break right down through the box, the hammer completely fails, a swing failure off the prior week's low would be good at 47s. You probably take that up to this low here at 62s, and then we start coming down to this area of naked singles. I would buy this definitely if we traded down to 37s, put my stop underneath this thrust candle at 30s, and try and buy that. And then again, I can't see us much past that today, so I won't really mention it for now. You can see the downside ATR is at 43, so again, I don't think we need to go any further back than that, but that's the plan as it stands so far this morning, and we'll see how the day develops.